Big mortgage news, Kentucky. Fannie Mae just removed the 620 minimum credit score requirement from their Desktop Underwriter system. And this could change everything for first-time homebuyers who thought they were locked out of conventional loans.
Okay, let's talk about something that's a really big deal. A massive change is coming for anyone even thinking about buying a home. The rulebook for getting a mortgage is getting a serious update, and honestly, it could open the door for millions of people. So let's get right into it.
For a long time, the answer to that question has been a pretty hard yes. That one little number could be the single biggest wall between you and owning your own place.
Well, what if I told you that entire way of thinking is getting a reboot? What if that wall is about to get a whole lot shorter, or maybe just disappear altogether?
All right, so let's get into the nitty-gritty. What exactly is happening here? Who's making this change? And, most importantly, when does it actually kick in?
So the organization behind this is Fannie Mae. Now, they don't give you the loan directly, but they are a huge player because they buy mortgages from banks and other lenders. And because they buy so many, they get to set the standards for a huge chunk of the entire mortgage market. When Fannie Mae makes a move, believe me, everybody listens.
And this change is happening deep inside the engine room, in their powerful software system called Desktop Underwriter, or DU for short. You gotta understand, thousands of lenders use this exact system every single day to get that first yes or no on a loan application.
And here it is. This is the big one. Up until now, the system had a hard stop, a 620 credit score. If you came in with less than that, well, you were probably out of the game. But for any new loan applications started on or after November 16, 2025, that minimum score requirement, it's gone.
So a number is going away. What does that actually mean for you in the real world? Let's dig into the so what of ditching this one single rigid number.
For years, this was the magic number, or maybe the tragic number for a lot of people. It was basically an automatic bouncer at the door. If your application showed up with a 619, that digital door would just slam shut, often before a real person even had a chance to see anything else about you.
This really lays out the whole shift in thinking. We're moving from something called score-based gating, where one number decides your fate, over to a comprehensive risk assessment, where the system is designed to look at the whole picture.
And this quote just nails it. It's not about ignoring risk, not at all. It's about getting smarter about how we evaluate it, looking at the whole person, their whole financial life, instead of just getting stopped by one data point on a report. Okay, let's pump the brakes for a second. This is a really important moment for a reality check. Because while this news is awesome, it's absolutely crucial that we all understand what this change does not mean.
So the big question is, does this mean credit scores just don't matter anymore? No way, not even close. And that's probably the biggest myth we need to bust right now.
Let's be crystal clear. This is not a golden ticket. First off, your credit score is still a huge piece of the puzzle. It still matters a lot. Second, this doesn't guarantee approval for anyone, not at all. And risk-based pricing is definitely still a thing. A lower score will probably mean a higher interest rate. Now here's a big one. Individual lenders can still have their own minimum score rules. They're called overlays. And of course, you still have to clear all the other hurdles, prove your income, have your assets in order, and have a reasonable amount of debt.
To really wrap our heads around this, I think an analogy is perfect here. It makes this idea of a comprehensive review feel really simple and clear.
Think of it like applying to college. The old system was like the admissions office automatically throwing out your application just because of a low test score. But the new way? Now they're promising to read your whole file. Your credit score is still there, yeah, but now it's being looked at right alongside your income and assets. Think of those as your grades. Your payment history? That's kind of like your personal essay. And your debt-to-income ratio? That's your extracurriculars. It's the whole package that matters now, not just one test score.
So how do you take all this information and actually use it? Let's put together a little playbook, an action plan for anyone who's thinking about applying for a mortgage in this new world.
All right, here's your game plan. Step 1, document your history. If you don't have a ton of credit, but you've been a rock star at paying your rent and utilities on time, get that paperwork together. Step 2, get organized. Have all your financial documents, your pay stubs, your bank statements, ready to go. Step 3, manage your profile. Pull your credit report, fix any mistakes, and try to pay down those high credit card balances. And finally, step 4, and this one is critical, shop around. Talk to a few different lenders and ask them this exact question. Do you have your own minimum credit score requirements or overlays? Their answer will tell you a lot.
So if you remember just one thing from all this, make it this. A single number is losing its veto power. And that means the strength of your entire financial story is what's really going to matter from now on.
And that kind of leaves us with the million-dollar question, doesn't it? This is a bold move, and it's clearly designed to help more people become homeowners. But will it work? Will it create a new wave of successful, sustainable homeowners? Or could it just be shifting risk around in ways we don't quite understand yet? I guess only time is going to tell.
NMLS number 57,916, company NMLS number 1,738,461, equal housing lender, not a commitment to lend. All loans subject to credit approval and program guidelines. If you've been told you don't qualify because your score's too low, let's revisit it. The rules have changed, and this could be your chance to buy in 2025. Call or text me at 502-905-3708. Or visit my LouisvilleKentuckyMortgage.com to start your free pre-approval check. If you'd like to see which programs you qualify for, reach out to me directly. My contact info is in the description. I'll help you run the numbers, check eligibility, and get you pre-approved. Don't forget to like this video, subscribe to the channel, and turn on the bell for more updates on Kentucky homebuyer programs. Thanks for watching, and I look forward to helping you become a homeowner in Kentucky.